Hey friends, welcome back to the channel. Today we're diving into a topic that might surprise you. Mid-cap Singapore stocks that offer both growth potential and regular dividends. Most investors think they need to choose between growth or income. You either pick high-flying tech stocks that might double your money but pay nothing, or boring dividend stocks that barely move in price. But what if I told you there's a sweet spot in the middle? Mid-cap stocks often fly under the radar compared to their blue-chip counterparts, but these medium-sized companies can actually provide the perfect balance. They're established enough to generate consistent cash flow for dividends, yet small enough to still have significant room for growth. I've been researching this space extensively, and today I'll share 4 promising mid-cap Singapore stocks that could give you the best of both worlds. We'll look at their business models, recent performance, and why they might deserve a spot in your portfolio. Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers, with over 850,000 reads and 53,000 likes. I produced over 800 videos with more than 350,000 watch hours as of February 2025. I also focus on regional and global economic trends. Before we jump into our top picks, let's talk about why mid-cap stocks deserve your attention. Blue-chip stocks get all the headlines because they're household names, but their massive size often means slower growth. Meanwhile, small caps offer explosive growth potential, but typically can't afford to pay dividends yet. Mid-caps sit in that Goldilocks zone, established enough to generate consistent profits, but still with plenty of runway for expansion. And in Singapore's market, there are some hidden gems that offer both solid growth trajectories and meaningful dividend yields. Let's start with a name you probably recognize, Starhub. This telecommunications company offers mobile, broadband, and pay TV services to individuals, plus cybersecurity solutions for businesses. How has Starhub been performing lately? Pretty well, actually. Their revenue increased by 1.4% year-on-year to 2.36 billion. More importantly, their service revenue, the recurring part of their business, grew by 3% to 202 billion thanks to growth in both broadband and enterprise divisions. Their bottom line looks even better, with net profit climbing 7.7% to 161.7 million. That's solid growth for an established telecom company. What about dividends? Starhub declared a final dividend of $32, bringing their total 2024 dividend to $62. That's actually higher than their pledge to pay at least $6 for the year, showing their commitment to returning value to shareholders. But what makes Starhub interesting for the future? They're focusing on 2 key growth areas. For consumers, they're pushing customers to migrate to high-bandwidth broadband plans. And on the enterprise side, they're expanding their cybersecurity and regional ICT service offerings. They're also adding the 700 MHz spectrum to improve network experience for customers. These moves position Starhub well for continued growth while maintaining their dividend payments. What's your experience with Starhub as a customer or investor? Have you noticed improvements in their service quality lately? Drop your thoughts in the comments below. Next up is a company you might not have heard of, Oiltec International. Don't let the unfamiliar name fool you. This company has a 44-year track record as an integrated process technology and renewable energy solution provider. Oiltec designs, builds, and commercializes plants for the edible oils industry. They've successfully completed projects in more than 35 countries across 5 continents, showing their global reach despite being a Singapore-listed mid-cap. Their recent performance has been impressive. Revenue for 2024 jumped 14.5% year-on-year to RM 230.3 million, while gross profit shot up by a whopping 40.4% to RM 55.1 million. Net profit increased even more dramatically, up 55% to RM 29.6 million. For dividend hunters, Oiltek declared a final dividend of $18, higher than the $0 paid out the previous year. Combined with their interim dividend, the total payout for 2024 was $27. What makes Oiltek particularly interesting is their positioning in growing markets. The global oil and fats market was valued at $257 billion in 2023 and is expected to grow at a compound annual rate of 4.6% through 2033. Even more exciting is their potential in sustainable aviation fuel. The aviation industry has committed to achieving net zero carbon emissions by 2050, creating massive demand for SAF. Oiltek is well positioned for this trend since they can design and deliver plants that treat palm oil mill effluent, which can eventually be upgraded to SAF. Think about it. How many companies do you know that combine decades of proven expertise with positioning in both established markets and emerging green technologies? This combination of stability and growth potential makes Oiltek worth considering. Now let's look at a company that literally keeps Singapore moving, SBS Transit. SBST operates around 200 bus services with a fleet of approximately 3,400 buses. They also provide rail services through the Northeast Line and Downtown Line, and recently won the contract to operate Singapore's 7th MRT line, the Jurong Region Line. In 2024, SBST's revenue increased by 2.1% year-on-year to $1.56 billion, while operating profit dipped by 4.5% to $73.2 million. Net profit still managed to inch up by 1.8% to $70.3 million. The company generated healthy positive free cash flow of $21.5 million, allowing them to reward shareholders with generous dividends. They declared a final dividend of $0.469 plus a special dividend of $0.841, bringing the total 2024 dividend to $0.2868. Here's what's impressive. That dividend level was more than double the $0.1 paid out in 2023. Talk about a significant income boost for shareholders. Looking ahead, SBST's rail operations are expected to grow marginally with higher ridership and fare adjustments that took effect in December 2024. They've also expanded their network. The new Punggol Coast MRT station on the Northeast Line recently opened, and the new Hume MRT station on the Downtown Line began service at the end of February 2025. However, it's worth noting that bus operation revenue will be impacted by the expiry of the Jurong West bus package on August 31st, 2024. What makes SBST attractive is their essential role in Singapore's transportation infrastructure. Public transport isn't going away, and as Singapore continues to expand its rail network, SBST stands to benefit. This provides a stable foundation for both continued operations and dividend payments. Have you noticed any improvements in Singapore's public transportation system lately? These improvements often translate directly to SBST's bottom line. Last but definitely not least is Riverstone Holdings, a manufacturer of specialized gloves. They make nitrile and natural rubber cleanroom gloves for highly controlled environments, as well as premium nitrile gloves for the healthcare industry. Riverstone has built an impressive manufacturing footprint with 6 facilities across Malaysia, Thailand, and China. Together, these facilities can produce a staggering 10.5 billion gloves annually. Their 2024 performance was nothing short of spectacular. Revenue rose 17.3% year-on-year to RM1.07 billion. Even more impressive was their profitability. Gross profit margin improved from 32.3% to 36.4%. Resulting in gross profit jumping 32% to $390.1 million. Net profit increased by 30.2% to RM286.9 million, and free cash flow stood at RM227.2 million, 15.1% higher than the previous year. With such strong financial results, Riverstone was generous with dividends. They proposed a final dividend of RM0.08 and a special dividend of RM0.04, bringing the total 2024 dividend to RM0.24. What's driving Riverstone's growth? Management points to new client acquisitions in the clean room business, which should bring additional revenue once the qualification process is complete. The clean room glove market is particularly attractive because it serves high-tech industries like semiconductors, electronics, and pharmaceuticals, sectors that demand absolute precision and cleanliness. These specialized gloves command higher margins than standard medical gloves, giving Riverstone a competitive edge. While the post-pandemic normalization hit many glove manufacturers hard, Riverstone's focus on specialized products for critical industries has allowed them to continue growing. This demonstrates the resilience of their business model and their ability to adapt to changing market conditions. Now, you might be wondering how to incorporate these mid-cap stocks into your portfolio. Should you go all in on one that looks particularly promising, or spread your investment across all four? As always, diversification is key. Each of these companies operates in different sectors: transportation, telecommunications, industrial technology, and healthcare supplies. By allocating your investment across multiple sectors, you reduce your exposure to sector-specific risks. For Singaporean investors looking to build a balanced portfolio, these mid-cap stocks could complement your existing positions in blue-chip stocks like DBS or OCBC, growth-focused ETFs like CSPX or VWRA, and REITs for additional income. Speaking of diversification, many investors are also looking at global growth stocks for 2025 and beyond. Some interesting options include Hims & Hers Health and Telehealth, Transmedics Group in medical technology, TG Therapeutics in biotechnology, and Grab Holdings in technology. Grab is particularly interesting for Singaporean investors since it's headquartered here and has become ubiquitous across Southeast Asia. In Thailand, for example, Grab has become slang for food delivery and transport in everyday conversations, showing how deeply the company has penetrated the market. If you're just starting your investment journey with around $20,000, you might consider allocating a portion to these mid-cap Singapore stocks while putting the rest in broader index funds or ETFs like VWRA, which has shown solid performance with an 8% profit over just 6 months for some investors. Before we wrap up, I want to emphasize that while these stocks show promise, all investments carry risk. Mid-cap stocks can be more volatile than blue chips, so make sure these investments align with your risk tolerance and overall financial goals. Have you invested in any of these mid-cap Singapore stocks? What has your experience been like? Share your thoughts in the comments section below. Let's recap what we've covered today. We've explored 4 promising mid-cap Singapore stocks that offer both growth potential and dividend income. Starhub, a telecom company expanding into high-bandwidth broadband and enterprise cybersecurity. Oiltec International, a process technology provider positioned to benefit from both the edible oils market and sustainable aviation fuel. SBS Transit, an essential transportation provider expanding its rail operations. And Riverstone Holdings, a specialized glove manufacturer with impressive margins and strong cash flow. These mid-cap stocks demonstrate that you don't have to choose between growth and income. With careful selection, you can find companies that deliver both, growing their business while sharing profits with shareholders through dividends. As Singapore's market continues to evolve, keeping an eye on these mid-sized companies could give your portfolio the boost it needs. They might not make headlines like the big blue chips, but sometimes the best opportunities are hiding in plain sight. If you found this video helpful, please hit that like button and subscribe to the channel for more investing insights. I'd love to hear which of these stocks interests you the most, or if you have other mid-cap gems you've discovered, drop your thoughts in the comments below. Until next time, this is Iggy from the Investing Iguana, helping you grow your wealth one video at a time.